How can you see what's happening?
Good morning, traders, and welcome to the live trading webinar today from Bookmap. Today we have Scott Pulcini. Traders, and welcome to the live. Scott Pulcini is a futures trader. He's here every Thursday, 10 a.m. He will be trading live. It is in demo. Let's go through the risk disclosures. You guys know who Scott is. He does offer mentorship services as well, and I'll put this into the chat if you want to reach out to him. Risk disclosures, understand what you're getting into with the live trading here. Okay, so it's important, the general disclosure that all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, so with that said, Scott, are you here? And we will broadcast Scott's screen here.
Do you hear me, Bruce?
There you are. Excellent. Okay, so let's get your screen up, and we'll get this going. All right, there it is. Excellent. Okay, great. All set.
All right, all set to watch a bunch of nothing happen. It's pretty dead. There's actually, this is the first setup the entire day, basically in any market besides wheat. I'm currently short wheat here. Show this quickly. There was some ice up here, out there. This was before. Yeah, you had this 170 here, and then follow up another 70 to 240 in this zone here. You got your full, more than a full ATR. Here's your retest. Here's your failure. So I'm short. This is looking bearish. Overall, we are breaking down out of some. How do I mute when people come in the room? For some reason, it keeps turning on.
It's a setting in Discord, and you'd have to.
I'm just.
Yeah, you have to go into your settings, and
let me see if
it's in the lower left-hand corner, user settings, and then you go to notifications.
Lower left corner of what?
Of Discord.
I don't see anything in the lower left corner here. Actually, I'll show you. So
yeah,
this is
down there,
see.
Down lower left-hand corner there. Yeah,
oh,
that
here?
one. Yeah. Go to, and then go down to notifications. You'll see it down kind of near the bottom there. Yeah. And then just unenable, like, all of the ones below there. Just click them all to the left.
All these?
Yeah.
You think I know how to use this? I've been have my own room for a year and a half.
It's something like this. I mean, like, I'm not sure which, maybe not all of them, but most of them here for sure.
Okay. That should do it.
Sold stock sell GC, 196 contracts.
All right. We might be forced to trade gold today, so dead. But anyway, you can see here, major balance breakdown. I don't usually like taking these trades because this is just so obvious. You usually get the snapback and then it goes. But if I get the signal, I'll take it. Doesn't always do that, but the obvious trades are usually the ones that don't work so well. All right, so this is ES. Finally got us set up right after the number here, the housing number, 725 ice. My threshold for icebergs is 700, so this is a tradable zone. We are currently below the yellow lug, so I don't take longs. I only take longs with my conservative entry. So my conservative entry is that ice zone. I wait for a full ATR. I wait for a retest. I wait for a failure. On the short side, I will go short aggressively, even though I'm very, very skeptical and wary of going short right here, because the relative volume is horrible right now, first and foremost. So you can see here, this is pretty pathetic. And this is after a number as well. So we had a little bit of stuff overnight. But other than that, I mean, it's pretty bad. If you're seeing red, it's not good. And it's NASDAQ ES. Russell's terrible. Dow's terrible. So this feels to me like a range type of day. You can see here in the bigger picture as well, we're just back into this zone here. This is nothing major, but this led to directional conviction up, and then held yesterday again. So I'd be shorting basically right into the zone. Below here, I'm interested in a bigger move type of short, but I'll take it if this setup fails, because that's my system, because you just never know. But the blue lug here, and I respect these lugs greatly. Ludwig levels, talk about these every day. These are incredible for day trading, support and resistance and targets. If I'm entering this trade here, I'm basically getting in at 59. I know the blue lug's down at 50, so it's like I got max 9 points where I'll probably cover this trade unless I see some pretty incredible relative volume. And then you also have the top of this market profile composite, which you can see we bounced from yesterday. So there is a chance this can get in here and accept in this one, and when they accept in composites, you expect the other side. But this is also a very important spot gamma level, where you can see this 42.50 in the cash is equivalent to basically 42.52ish, 51ish in the futures. This is an area where this could just ping pong back and forth until tomorrow's OPEX. So my point is, you're going to need to see some serious participation, aka selling, to get through here. And I'm very wary of shorting right here, but it is 9 points. I mean, it's not a good risk reward trade at all if I do get filled on this, because I'm risking, the current ATR right now is average true range 4.75. So I go a few ticks outside that. So I would stop into this trade 5.25 points below here. So I'm risking 5.25 points below this zone. I'd be risking 5.25 points above this zone if that's how I play these areas, because I make the market prove it can get an ATR above this area. Plus the size of the zone is under 6 points. So I'm risking about 17 points to make 9, potentially. You will not make a living trading if you're taking 1 to 2 on your trades, right? You're looking for actually opposite that. You're looking for 2 to 1. But that doesn't mean you just put on trades and you hold them trying to get 2, 3, 4 to 1, right? You put on trades when you think the ability for it to be 2, 3, 4 to 1 is there, right? That's the whole idea. And if you don't, you shouldn't be taking this trade or taking a trade. If you know there's major support down at 50, you probably don't want to be taking this trade. I mean, I will take it for considering there's nothing going on here, and I'll monitor the 50. I'm hoping we can get through there, but my point is, this is not the best area to be shorting right here. NASDAQ, it's a little more structured stuff. You can see this balance area here. We broke down yesterday. We retested the high volume node. You just see the same pattern over and over. It held where it should have for now. Now we're back down here. So if this gets a little lower, you can see there's really no structure here. So this could move back down to these areas here, these zones here. The market could surprise us. You never know what's going to happen. Every day, every moment is unique. So, I'm thinking this will hold, but it doesn't really matter what I think. I let the real-time volume tell me. But if this can get below here, I think we can do that. So, but like I said, if you're going to break important areas, important zones, you need to see decent relative volume, and you can see here it's just not happening. right? We're barely getting the normal. So again, this relative volume chart is telling me the exact time period for the last 30 days. And it's telling me now we are barely getting to normal, right? So if you expect markets to break through important areas, you want to see areas like that, right? And this was overnight, so it's not really helpful. But there is a good lesson in this as well. So when you see these high volume areas, do it on this computer, it's easier. High relative volume areas. So this is actually in the close yesterday. Yeah, in the close yesterday. We were talking about this in my room yesterday, right? So the Fed minutes came out. You can see all this aggressive buying, and you see a spike, right? Yeah, well, the buyers are being aggressive, but somebody for this relative volume to spike, there are responsive sellers, passive sellers, right? And so somebody's selling it, they're just not selling it initiatively. The initiators were the buyers. Well, guess what? When that area fails, the buyers start to panic and they puke out. And you did get I was short a little bit overnight. You did get a move down. I didn't get to my target.
Soybean iceberg buys ES, 201 contracts.
But the point is, you want to keep an eye on these relative volume areas. One, when they start to form in the middle of balance, you can expect a bigger move is coming. But you also want to watch when the areas break. So if you see aggressiveness, and then it gets outside of that area the other way, you can expect a big move because all the traders that were aggressive need to get out of their trades, right? So you can see here overnight, the same thing happened here. Once again, aggressiveness. So it's these two bars here, or this area here, and then once that broke, so these are almost. This is pretty much what I do with my SI indicator zones, right? It's all based on volume and trap traders. So this is obviously an important area. You can see we broke down, you can see we retested it, and then these longs are like, oh crap, this is not going up, let's get out of this trade, and you get a 20-point move, right? So pay attention to relative volume is the moral of that story. Let's draw some of these other areas. I really trying to avoid trading gold lately. Since the war started, it's not been a very good product. It's just been whipsaw city, stop run. I mean, there's got to be the worst traders on the planet in this market. It's nothing but stop runs back and forth. That's it. You rarely see ice anymore. So that's the most latest stop run. This is an area where it could hold, but I'm not liking. This is looking more bearish to me, obviously. We broke down out of this guy, built more balance, broke down, built more balance. Now this is trying to break out. This is actually an important area because if this fails, this will be a failed breakout of this overnight balance, and we could get lower. This zone is the zone that is important because you can make this one big multi-week balance. And you can see this zone is drawn because of everything that's happened here. Directional conviction, move up. Didn't quite get there yesterday, but this is a zone that we could just come back and do that, and it wouldn't surprise me whatsoever because this market will not go anywhere. It just keeps ranging. But if we get through here, then you want to pay attention, and then this is the next area down. I don't think this is that important of an area now if we break this, right? You got to remember the longer term traders, these are balance areas are just traders placing bets. When one of them is wrong, one group is wrong, they have to get out of their position, kind of like we're seeing in wheat. Right? This is exactly what's going on here. For weeks, you can see this is going back a month, basically this balance, right? Traders placing bet. Who is right? Are the longs right? Absolutely not. What are the longs doing right now? Panicking and puking. And that's when you get the move, right? So markets are one or two states. They're either balancing or you're getting directional conviction, right? This is balance. This is directional conviction. I should have here is some prior zones. So I just switched to the December contract, so I lost all my zones. You can see here if I do this will bring them. For some reason, this hasn't rolled on Thinkorswim. It's not the official roll date, but there is more volumes. As you can see in the October contract, you can see all these zones here. So let's see what was important down here. Yeah. So this is pretty important. This looks pretty bleak for wheat. It's good for us for free beer and free cereal. But you can see this balance here. We came down, tried to build more balance here. same area. Now we broke down from this through the high volume node to this. This looks pretty ugly. Doesn't mean it's going straight down. I can see it. Again, when you get these obvious breakdowns, so many times it'll come back, it'll test the bottom or high volume node, then it'll go. So these are areas that it could bounce as well for now, but it's definitely not. It's definitely a bearish looking market. So when you see things like this, your best trades are waiting for pullbacks to short instead of trying to chase it. Because again, many times when you chase it, it snaps back on you. But this volume setup, you know, I look at the bigger picture to come up with my thesis, and then I play the volume setups as they unfold. And this is telling me to be short, right? I mean, I would not be surprised if it did that, stop me out, but this told me this is broken ice, one of my 6 distinct setups. Someone tried to hold this market up, wrong, retested, failure. This is the classic setup, right? So now I'm short. Some areas I will be watching to cover in that, and then we'll see what's going on in this. Again, I really, really, really don't want to trade gold. Let me check ES here real quick, see what's going on. A whole bunch of nothing. This day has been pretty bad so far. Let's check our wheat Ludwig levels. So I don't know why this isn't drawing new. I know she just rolled this today. But this should be drawing new Ludwig levels with this much time below the blue. So that's why I took the trade, because there should be new Ludwig levels here, but hopefully she's on this webinar and she can check it, because it's not normal for it to stay below the blue lug this long without forming new ones. But anyway, I was going to look at some new Ludwig levels for targets, but don't have those right now, so hopefully that will populate here. Yes. So you can see we're just pretty much in the middle of nowhere here. Right in between market profile composites, right here, dancing around the yellow lug. This just looks like Chop City to me. Right, where it's going to be tradable is if we can break down and back into here, we get under that 50 level. I think we could make a move down here. If this gets back into here, then you expect to move up to here. For this 4,300 to 4,320 is important spot gamma as well. So it just looks like to me into tomorrow's OPEX, we're just going to be range trading. So so now on the flip side, I can go long this setup and will, but we're below the yellow lug, so I need to see my usual ATR retest and failure. All right, so ATR right now is 4.71, so I need to see 4 3/4 points out of here. 68.5, 72.5, 73/4. 73/4 is the official ATR right now. So I need to see this touch 73/4. I need to see it retest. I need to see it fail again, and then I'll go long. Yes, is there a chance this just keeps going? Absolutely. But I have rules that I follow based on Ludwig levels, and you know, this again, this is a kind of limbo area as well, where I need to see confirmation of the zone. Meaning, I'm not gonna. There's times I am aggressive where I'll just the minute this gets an ATR out of here, just outside an ATR, I'll jump in certain situations. But in this situation, this is Chop City. I'm going to force it to do that. If I miss a trade, I miss the trade. There's always another setup right behind it, right? So that's what I'm demanding from this potential long here. And I was going to go short here aggressively. But if this gets an ATR above here, then this short idea is disqualified. And then I will cancel this order, which is this is about to do. What did I say, 73/4? You can see this, the market is just, there's just nothing going on. It's pretty amazing too. We're doing some test trades in my room, and one of the ones we're going to be doing here shortly is when you get these volume events, the market will go to an ATR, and there's actually kind of a scalp in that type of trade where you can literally just fade it. The minute it gets an ATR, sell it and play for a move and risk an ATR above here, and then play for a move back to the area, and then that would be the retest, right? You would not imagine, you could not imagine how many times that happens in all these markets. All right, so I'm not doing that trade right now, obviously. And we're going to do a test in a few weeks on that. But anyway, this is ATR, so I'm now waiting for retest failure of this iceberg zone. If I don't get it, then I don't get it, because I have my distinct rules. Speaking of retest failure, there was a little area here in crude. Crude is rolled as well to the October contract, so make sure you're on October. You can see here there's some sell ice, 256. This is the zone here. So this is what I'm talking about. I mean, it's like, so ATR in here is 30, 31, round up. This went a little outside the ATR, but then it comes back and retests the area, right? Because it's just, these are trap traders, and it's just uncanny how often it will retest and then go, right? So why am I not getting long this? Well, I would normally be getting long this, especially with the retest failure, but I respect the Ludwig levels. I know how powerful they are, the major Ludwig levels, and you can see we're right at the red lug, right? So this is incredible support. I'm sorry, resistance. This is incredible support. So I don't go long in the lugs unless I see some incredible relative volume, what we were talking about earlier. The relative volume is not incredible. It's actually horrific. So I am not confident that this can punch through the red lug here. You can see here. But remember that, the contracts are still rolling here. Let's just check real quick. This is a good way to, if you guys don't know how to do this, just go here and see what month you should be trading. Go to the product, go to quotes. You can see here, the majority of this volume now is in the October contract. All right, you still got 30,000 in SEP, but that's basically 4 to 1 in this month. So we are on the right month. So I was saying the relative volume, what I was trying to say is relative volume could be lower just because of the split months, but the majority is in this month, and this is really, really bad, especially for crude, right? So you're basically at 50% of normal. You don't expect big moves when there's nobody playing. What you expect is chop city, because these are when the algos take your money, right? So my point is, I'm not willing to go long that setup into the red lug because I think this area is going to potentially fail. But there was a setup. It was bullish. That's that sell ice. Here you get the retest failure. So if this does bust through here, then I know what happened here, and then we get new lugs, and then I'll go long. This is also an important area. This market is in a major downtrend now, right? And we're just returning to an important zone. So I don't really want to go long this market until it can prove it can get through this zone. So I draw my zones, and the 4 important areas of market structure. So what are those? Tops and bottoms of balance areas. By volume nodes of balance areas, that's just where the most trade occurred in a balance area. And then directional conviction. Gaps are also directional conviction, and buying and selling tails. So you can see here, this is a selling tail. Tails are just instant rejection, and then it led to this directional conviction. So this zone is a very important resistance zone. So they're even more important when markets are in major downtrends. I don't draw the downtrend lines, and these. I just see it all the time when traders draw them, and then they keep like revising them and revising them. I don't play moves into trend line. Like I don't draw and then just automatically will short into that area, right? I'll keep an eye on it. I can see it's happening, but I use my market structure and my lugs to take trades. I just see it all the time. Like traders will draw this trend line like this, and then this will happen. Then I'm like, oh, okay, I'm going to change it now. I'm going to make it this one. It's just know it's in a downtrend, right? And in downtrends, some of the best trades are, like we were just talking in wheat, if that happens, retests of important zones, right? So this is an important zone. There's no relative volume. I can definitely see this failing. I would love to see a short setup right now, but that's not happening. So let's just sit here and wait. Any questions on any of that, Bruce? That's basic stuff. I know I go over every webinar, but there's always someone new on here. So
yeah, no, nothing, nothing so far in YouTube, and no, everything's good.
Okay. All right, so we're just waiting for a retest of this zone to go along. There's just literally nothing going on here. You guys got to remember, this is August. This is the key month that the bigger traders, funds, so on and so forth, go on vacation. Right, so this is where I've been getting killed this month just because it's been whipsaw, no volume, low relative volume. if I'm trading independently, I'm probably taking this month off with the rest of them, right? But I have obligations in a trade room and stuff like that, and it's fine. But you expect drawdowns all the time when you're trading because trading is just a probability game. But this month has been actually pretty rough. So just either there's a number of things you can do during this month, right? You can either just not trade. That's obviously not possible for a lot of people. They can't just sit in front of screens and not trade. Cut down your size, trade on sim, do one of the one of the funding sites. My main one is Apex Trader Funding, where I have actually a few where I'm testing strategies. We're testing some strategies in my room. Get on there. You do have some skin of the game, so it's not like you're just trading sim where it doesn't mean something, because if you lose, you're still got to ante up some money for the tryout and stuff like that. So it makes it more real, right? Versus a simulator, but you're not getting killed trying out new strategies and blowing out $5, $10, $20,000 accounts, right? So that's what I recommend, especially in this type of trading environment. But you just need to recognize when it's bad, and great traders, good traders, profitable traders back off, and they say, I'm not going to give my money to these algos. I know a lot of people play the volume profiles and these high volume nodes, low volume nodes, and everything else. But when you break it down, this type of trade is just algo driven, and algo markets are not predictable. I don't care what you see on the volume chart, right? As far as the volume profile, that's why I actually use market profile for my TPOs and stuff like that, for my market profile stuff. But you're just getting whipsawed right now by algos. Is all is happening when it's a low volume environment. That's what I'm saying. When the volume starts to pick up, then you can start looking at your volume profiles, in my opinion. I just don't think they're as reliable when you have all these different algos in here that have different agendas, right? So, and this is the algo's favorite time, is when the algo's worst enemy is the big money, right? That's why these areas so important, which looks like we're going to do the normal ATR retest as usual. That's why when you see areas like that, this is why it's the core of my trading, because this kind of activity disrupts algos, right? And they can't play their game because the big money comes in and screws it up. So this isn't like this is huge either. This is only 700, but again, this is my threshold for this market. So we're waiting for a retest here. And then I will go long on a retest failure outside of an ATR. This is a perfect example how the one strategy we're working on. We talk about the scalping all the time, and I'm not a believer in it anymore. That's how I made my millions of dollars, and it's not reliable, because it's all algos, and this stuff is usually fake. You can't rely on orders, but there are bigger, more of swing trading type of trades you can make. So the one that you guys can start looking at right away is when you get these volume events, especially in algo driven markets where there's no relative volume. I bet you these work the best. That's why they've been working all the time lately. When you get a full ATR out of here, you can short it, you risk an ATR above, and then play for a move back to the volume area. You will be shocked at how many times this happens. I'd say 80% of the time, and even more so in some markets like crude, natural gas, where we're testing the areas. So that is a scalp you can do. I know you guys have the advanced heat map. I still haven't got on with Bruce about the
no, we haven't really gone over much of that at all. Or
right.
yeah. Anyway, just to note that 80%. I mean, there's no quantifiable study here to say 80%. It's not a trade recommendation. But
no, that's just from my observations over watching thousands of these, right? So that's my opinion. That's my opinion. That's not an official stat.
Yeah. I just need to get some of that across here so people don't go, oh, he said 80%.
Right. That's just my. I mean, granted, I should have stats for the thousands and thousands of trades. I mean, just in this alone, I've done. Let's see here.
It comes back frequently is kind of the answer, I guess, or the
right. So you can see just in this alone, I've done 1,000 trades, right? So I just haven't kept up with them, but you can see, look at this drawdown I've taken from my highs. Again, this is trading tiny. This is trading 2s, 3s, 4s, right? So, but I increase my size. You guys see this every webinar, right? As my account value grows, I increased my size. I put in my account size. This is starting at 100 grand, $58,000 profit. That was up at near 90, right? So that's the kind of month that I'm having, and it's kind of expected. I didn't expect this bad of a drawdown, but it's trading, right? And you can see every time there's been a drawdown, there's been a recovery. So if you have an edge, you will get a recovery, right? Because if you follow your rules and you do the same thing every time, right? So this has been quite the beatdown, but I know when September rolls around, that'll be that. So because I know I have an edge, right? I just don't know when, where, or how, but I know if I keep taking my trades. We talk every week about liking it to a casino. You keep taking your trades, following your rules. If you have an edge, you will make money. Casinos know they will make money over a year's time, right? They're profitable basically every year, because they know the math is in their favor, aka an edge, right? So they come in, a guy will come in and smoke them for $1 million or something. They don't panic and shut down the casino and start changing rules, and as far as their game rules, things like that, they just keep letting players play, and they know they will be profitable. It's the same thing with a trading edge. If you have a legitimate edge, and this is the best edge I've ever seen in futures trading, and you have your rules and you follow your rules, you will make money. Your equity curve will look like that. So, you don't ever know how much the drawdown will be, but I'm a little surprised on that for this month, but it is what it is. The trade has been horrific, right? Every day, like in my trade room, I get on in the afternoons. I think there's been maybe 3 trades in the last 2 weeks on the afternoon webinars, just because there's just nothing going on. It's just algos taking everyone's money. All right, so here's your official retest. Check your ATR one more time, 4.81. So I'm going to go 3 ticks outside that. Actually, we were going to round up to 5 because it's over 4.75. So ATR is 5. I'm going to go through 5.75 out of here. So the top of this zone was 68.50, 73.50, 74 quarter. That's where I will. Wait, is that right? Yeah, 74 quarter. That's where I will go long that, right into a stock gamma level, but these are the main ones. And so now this short idea, did I already cancel that? I don't remember canceling that order, but anyway, now that this was able to get an ATR above this area, I canceled that short. That disqualifies a short. If this would have held and not gotten an ATR above here, then I would have shorted aggressively because we're below the yellow low. So here we go. Really thrilled about trading these markets right now. There's nothing going on. So what I say, 74 quarter. I got multiple accounts I'm trading, so let me get this stuff set up. All right, so we'll see if we get the fill there. Wheat is doing okay. So I usually will get out at Ludwig levels or market profile levels. You can see here, these are actually my rules that we're working on in my trade room for these auto traders that we're testing. This is us straight out of Trading in the Zone, and the book Trading in the Zone. But my rules, or what I'm looking for, are, I already showed that. I think I showed this last week too, but so you can see rule number 3 here. I'm sorry, 5. Pay myself as the market makes money available to me. Lug levels, market profile composites, highs, lows, pointed controls, VWAP standard deviations, important predefined zones, with the kind of the zones I've been showing you today, based on the candle structure or opposing SI setup. So, like I said, I want to see some new lugs build here. I don't know why. Let me send her a message in my room real quick. Hold on, guys, because this should not be sitting here like this. So she's actually in my room, Pamela Ludwig, so you can send her direct messages. Send her a message, so let's see what's going on there. Other than that, let's take a look back, some structure stuff to see if this is an area. These are areas that I can be getting out. right, see how long it's been since we've been down here. Right. Long time ago. All right, so can merge some of these. These days overlapped each other. That one did. That one did. I think this was a single day. Hold on. And these are from last September, basically a year ago. But you'd be amazed in how the market respects them when they come back to them. We actually traded through this one, so I'm not going to draw that one. But oops. You can see how this market respected this one and took off from there, right? So this is, I would assume, this is the next major area down here. Sorry, I usually have these drawn, but this just switched months and I lost all my data. So we're already through that one. So let's go back and see what the next one down is. So this one you can draw because you had, so this is a good example when drawing these, right? So you're looking for prior days that overlap at least 50% of the value area. So this one could be drawn, but we've already traded through that. But this one down here, this day overlapped this day. This was an outside day. When the third day overlaps the first day, you can merge all three, right? So we'll merge that. Merge that. There's your zone. All right, so that should give us some kind of target here since there's no lugs yet. Yeah. So this just popped back, literally popped back like 5 cents while I was drawing that. But my control, I'm sure, is right here. I probably could have got out of one there, but we'll see if it can make it down at least bottom here, and I'll watch at it. If I'm not getting new lugs, I'll watch that 740 area. Market just literally came all the way back. This one more time. And you can see now they're buying these grains, and that's why, literally, 10 straight cents while I was drawing that zone. So that's pleasant. All right. So no fill yet here in ES. So this was, this is what I'm talking about, right? So everything that I'm looking at tells me that this area should be an area, and we're still not through it yet. So I'm still wary that I don't think we're going to get through here. But if we do, then I can go long, at least short term. It's still in a downtrend. But the point is, like, I was worried about going long there. I thought was going to happen. Well, the real-time volume said, you can go long, right? The volume event. So the volume event was broken ice. Gone. Here's your liquidity that you can, when you're pulling up your markets every day, I would scrunch them together, see where the main liquidity is, and you can bet that the market will get there eventually. And so now these guys got their fill. That might be the end of this move. If not, we'll watch to see if we can get through that zone I just showed you.
S&P stocks top by ES 1358 contracts.
All right, filled. So this is what you want to see too once you get filled. Now I can trail my stop based on this new setup and or add to it. Right. So huge stops just fired off here. Whoever was short overnight just said, yeah, I got to get out. Actually, it went higher overnight, so I don't know what this is, why this size of stops are right in this area. But it doesn't matter. They were. Someone just did a huge puke right here. So now one of two things, right? One, let's see where we are in the lugs. If we're above the yellow lug now, I can take my next trade aggressively out of here. So we are, but yeah, I guess I could take that aggressively. All right, first of all, let's trail our stop. So now I'm trailing my stop, not based on my P&L, based on the new setup. All right, so the 4.96 is your ATR, so 5 I go through about 2 or 3 ticks outside there, so we'll go 5 3/4 out of here. So the bottom of the zone now is 75.5. So 6 points would be 59.5. 69.5, 69 3/4 is my stop out now. Right, so you see, because of this new setup, actually I think I got a worse fill there too. No, I didn't. Because of this new setup, I can now, my stop, actually I didn't even have it in yet, but my stop would have been basically 5 3/4 points below here. So my stop would have been somewhere down here. Now that there's a new volume event, I just saved myself 13 points of risk, right? So now if this comes back, I'm only going to be losing about 4 points versus 17, right? That's how I trail my stops. I don't trail my stops based on my P&L, where you get, you guys do it. I would say the majority of you guys on here, traders on here, they get it in their favor, like, I'm moving this back to break even. Well, and you're going to get algoed most time, right? The only time I will move it, it has nothing to do with me breaking even. It has to do with this newest volume setup, right? So that's how I trade. That's how I trail my stops, not based on what I don't want to give back. That's one of the biggest, I'm not going to go on that rant today, but that's one of the biggest mistakes that traders make. All right, so we are above the yellow lug. I'm not excited about being aggressive on any setups in these markets right now because, again, this relative volume is horrible. I can see this just snapping back in my face. But I will follow my rules. We're above the yellow lug, so 5 3/4 points out of here, I'll add to this trade. See if we can get a run up to 4,300. So the top of the zone was 80.5. That's 85. Or, sorry, 80 1/4. It's 85 1/4. What did I say? 86. 85.75 is 5 3/4 points out of here for my second entry on this trade. So I will add to that. And that is just outside an ATR, right? That's why I'm doing that. So if I get filled on this, my stop for this will go down to where I trail my stop for my original position. And then I'll have 2 positions on. So you can see, you get a day where you're getting setup after setup after setup. You can add, trail your stop, and you can have a year making day on a trending day, right? That's the goal of a trader, is trying to have, you keep taking the trades, and then you finally have a day where you get the major trend, and then you just absolutely crush it, right? That's what trading is. It's basically treading water, making a little, losing a little, making a little, losing a little, making a little more, losing a little more, and then you finally get your trend day, and then you kill it. Most great traders, if you look at their P&L, they probably have 5 to 10 max days out of the entire year that make most of their P&L, right? And that's what traders have to understand. You have so many traders that come in. I can't tell you how many times I see my goal is to make $500 a day. Great. It's great that you want to do that. The market's not going to give you a consistent $500 a day every day. It's just not how markets work, right? You're going to just have these, back and forth, and then you catch the big one, and then that's how you make your P&L in a year. It is not a consistent day job where you can come in, punch the clock, and expect to get paid the same amount every day. It's not going to happen. So if you think that's going to happen, you're in the wrong business. All right, I'm surprised there's been nothing in NASDAQ today. So let's look at some of our other stuff just to see. There was a swipe here. This is the sweeps indicator. This is very helpful for drawing zones. You see on this ES trade, this helped me draw this zone where I didn't have to spend a ton of time like zeroing in and out or zooming in and out. You can see the swipes right there, and I just basically drew the zone, and that was this stop run, right? So all stop runs are sweeps, obviously, because there's, sweeping the order book to get out of their trades, but not all sweeps are stops. And this is a perfect example. This was a sweep in NASDAQ, but it wasn't really much of a stop run, right? It was only 98. You're seeing 574 sweeps here, right? Only 98 of them are stops. So all stop runs are sweeps, not all sweeps are stops. And you can trade these and draw zones on these alone. There are multiples of my normal thresholds that I have for the SI indicator. I don't know why that is, but meaning if you see 700 swipes in ES, it's not a lot. It doesn't mean a lot, is what I'm saying. So be careful drawing zones on sweeps unless it's like 3, 4, 5 times normal threshold. So you can see this one was 2,200. So out of the 1,300, out of the 2,200 sweeps, 1,300 of them were stops. So there was another 1,000 behind it. So, all right, so let me get my stops in these other accounts. 69.75. I'm getting smoked now. This is exactly what I was afraid of in this wheat trade. I should have been more diligent. I guarantee that was the point of control. That when you get these moves out of these balance areas, it is just so obvious, and you get these algos that just turn around and run it right back. And you can see this is poor trading. I needed to be out of some of these contracts down here in this zone. Whatever this was from down here, I drew it for a reason. This is far enough from this area. Like, I should have been out of some of my trade right there. This is poor caddying, poor trade. But now this thing can come all the way back into the zone and still be bearish, right? So what are the next areas now? I'm probably going to get stopped out of this, but a move into here is going to be an excellent short. A move anywhere in here, anywhere in this high volume. No, this white zone probably is the main area. Excellent shorting areas where you just wait and then you hit it. Right? These trades, so many, I can't tell you the percentage of this. It feels like 100% to me. Like when a market breaks down out of balance, it's just so many times it'll snap back in traders' faces because it's just so obvious, right? There's literally algos that play snap back when you break from balance because it's just so obvious. It's easy to program, right? And so, I mean, I'll hold this. I have a very strong feeling I'm going to get stopped now, but that was just, I should have been out of half of those, at least half of those in that important zone. I just basically made a mistake. I've been making a lot of errors lately. Not hard to do. That's why you got to be on top of your game. You're trading against the brightest minds on the planet. You cannot be making mistakes. They're just going to cost you a lot of money. And that one basically is going to cost me a couple grand. Any questions, Bruce?
Nope.
Wow.
Let's see. Yeah, I mean, there's some. Hold on. Yeah, over in Discord here.
So here's another thing. I saw this morning. This is why you want to bring up your markets. Look at this liquidity above, guys. This is not, hey, I want to be short. Look at all these sellers. It's, hey, we're going to this area because these are this is the big money, right? They get the market where they want it to go eventually, right? So when you see this, you're like, yeah, I want to be long this market any chance I get. There hasn't been any setups, but you see this on top of your analysis, your chart analysis. If everything lines up, you know that we're going pretty much right away. So that's a good sign. Russell's been leading too. That's a good sign for the CS trade. But
Soybean iceberg sells ES 209 contracts.
Sorry, I think I missed another setup in there. I think he said something. So guys, you're going to get immune if you have the alerts, the voice alerts, right, set up here on your sub chart. So down here is what you wanted to say. I just put in my wheat, so it'll read that off. But after a while, you hear so many of them, you're like, you hear them, but you don't hear them, right? So that's why you want this, so you can go back and say, oh wait, did I miss a trade here? So for instance, I did miss a trade. This was right when the webinar started. I missed a trade, or I missed a setup in soybeans, right? So you get to that, you just go to File, Alerts, and that'll pop up this text message box, and all that is here, right? So this is, it'll read it and it'll put it in print. So that's the text, that's the voice. Right? So in case I hear something but don't hear it, then I just have to look at that text. All right, so they're just pushing this thing higher like they do every single day because there's nobody in here to play. When the relative volume is very low, the default is up. Just remember that. Again, I'm not very excited about adding to this trade with this type of relative volume, but it's, we are above the O log. You did get monster stops, so this does get an ATR above here. This is considered a stop and hold. The big money keeps pushing it, even though there's not a lot of big money in it right now. But the other setup is when you get a stop run, the dumb money puke, it instantly rejects. That's called a dumb and dumber. Well, you can see this is not rejecting. Someone's coming in here and continuing to push it. So for now, we'll see if I can survive and have this move up higher. I think the ultimate target is up here near the spot gamma level. Speaking of which, let's look at our hero real time. So he has this on his site, and you can get this through Bookmap as well. But you want to keep an eye on when you get huge divergences. We've been seeing some divergences at the highs the last couple of days, and it's really signaled a sell-off at important spot gamma levels, right? So This is a green. This is SPY. You can see, so the blue, whatever color this is, purple is the options complex is bullish. It's moving with the market, so that's a bullish sign. You're not seeing a divergence. So the last couple days, here I'll actually show you. This is what I put in my room. Right, you can see here. I showed this the last 2 days, right? Divergences in SPY and SPX again at a major spot gamma level like yesterday afternoon. That's when we sold off in that 40 points in about 5 seconds. So this is when you want to be careful. If you're long, black is the market and you're seeing the options go the other way, especially when you get these straight lines. That means it's big money, big options trades firing off. You want to be very careful. When you start hitting targets like spot gammos, be ready to get out of your trade, right? So you can see the difference between what that looks like and what this looks like, right? It's following. So that's SPY, SPY. This is SPX. Tiny divergence, nothing crazy. Look at Qs, even though there's been nothing in Qs today. I mean in NASDAQ. Let's see, I don't know my alphabet, obviously. Not even tired today. Here we go. Yeah, so none of these are saying that something silly is going to happen here as far as a divergence rip back. So it doesn't mean it won't come back, but I'm not worried about that stopping my trade is what I'm saying. It's just one ingredient, right? It's not that is not a red light, green light type of signal service, but it is more so at important looks, right? So if we rip up here and you start seeing the black go this way, the blue go this way, and you're in important levels, you want to be very careful of trying to hold through these areas because you usually get the snapback. All right, so this is just Whipsaw City. Actually, I want to draw that zone in soybeans. So this is another thing too. You guys want to be watching multiple markets. So when these markets suck, there's usually something else going on somewhere, right? 145. It doesn't matter what. All you really need to know. It doesn't matter what futures market we're talking about. Volume is volume, right? Caught traders are caught traders. Big money is big money. Doesn't matter what you're trading it. You just need to know the thresholds. What's important for that individual market. For instance, like if I saw 242 sell ice in ES, I wouldn't even pay attention to it. 242 sell ice in soybeans is a lot, right? So that's what you need to know, and that's part of my course. I have thresholds for like 23 products, or you can just go back and research it yourself. You can go back and look at a year's worth of data, and you can figure out your own thresholds. But from when I made the original course 2 years ago, almost every threshold is still spot on. I'm a little higher, and like I've moved in that course, I think I have 120 for NAT for NQ. I've moved to like 150. The only one that's off significantly are bonds. I think I had 200 or 300 in bonds. You want 500 for bonds as your minimum threshold, but everything else is pretty accurate. Very accurate, I should say. All right, so this is the zone in soybeans. That's my first step. Next, let's see what the lugs look like. Bounced off a lug here that didn't draw. I'm going to be very, very upset. I don't know why this is not drawing new lugs. You need the conditions for new lugs, but I can't possibly believe the condition didn't happen with it being below the blue this long. But it has not responded to me in my message. So let's look at the beans. So beans were above the yellow lug. You can see here what's the story for today with your market profile. Every day you should try to come up with a story of what's going on in the bigger picture. Right? This market opened up. It tried to break down out of this composite, failed, got back inside. When a market enters a composite, you expect it to move to the other side. That happened basically immediately. Now it's trying to get inside here. Right? So that's bullish. What happened here was bullish. We got back inside here. That's bullish. So now I'm expecting a move to here. If this can hold in here, we have a real-time volume event, and we're above the yellow lug. The only thing that scares me here is we're at extreme standard deviation, VWAP. This is when these algos kick in, especially if there's no high relative volume coming through. So let's check the relative volume and see. So it doesn't scare me as much. Why? So let's see how different this looks in these other markets. Almost 3 times normal volume here in this area right now, and that's basically the sell ice area. So that when you get high relative volume, that's what screws up the algos. If there's nothing going on, you see that? That's where the algos snap it back on you. When you see high relative volume, many, many times it can continue. I'm not as worried about it snapping back in my face if I do take a long on this setup. Right? So that's step 2. We're above the yellow lug, so I can enter this long aggressively. And then step 3 is finding out the current ATR. Current ATR is 3.70. Average true range. This is just default on thinkorswim. It's a 14 period while there's ATR. Just helps you judge the volatility, and it's very helpful in knowing how far the market, if you can get outside ATRs out of the zone, then it's telling you something, right? So I round up, so that's 3.75. Let's go 3 ticks outside that, puts me at 4.25. Is my ATR to outside the ATR to enter, so 4.25. So that's 675. 7. So I will enter this long. Problem with this, though, I got to make sure we're not too close to the red lug if I enter this trade. That's the other thing that I know. So red lug is at 14.15. So, but I still would be risking, if ATR, what did I say, 4.75? So we'll say 5.10. Meaning, if I get in this trade, I'm getting in 5 points above. I've got to risk 5 points below, plus the size of the zone. That's another. So that's 15 points. This once again, this is a 1 to 2 trade. That is not what you want in trading, right? So this is what I'm saying. It's like you don't put on trades and just hope for 2, 3 to 1. I look at this trade and say, well, what's the max this can go? Well, red lug's up here. You can see where red lug is the exact top of this composite that I think this thing can travel to. But do I want to risk 15 cents to make potentially 7 or 8? That's what I have to decide, right?
Yeah, there's a question, Scott, on your ATR.
Sure.
So your DNT Matters was asking here. So the ES got 1 ATR above your zone, and it just retested it. This was some minutes ago, or many minutes ago. And it just retested it, therefore you canceled your short. Your zone is the absorption zone, right?
Yes, the zone was when this market moved down. So remember, icebergs are hidden orders in the order. They are not showing in the order book. There's only a certain percentage showing, so I think it's like 10%. So that means if this 700, this was a 700 lot buy ice. You can see it above here, above the zero line is buy ice, below is sell ice. So this was 700 buy ice. So in the order book, it probably just looked like a 70 lot, right? And then someone came and then they got all aggressive trying to pummel through it, and then they got a mouthful. There was another 610 behind it, or whatever I said, 630 behind it, right? So it's like they're like, oh wait, that wasn't a 70 lot, that was actually 700, and then they turn around and like, okay, we're out, right? So. Yes, that is absorption. I don't have the absorption indicator on here. I've taken some stuff off so it doesn't freeze up my computer. I already know it's absorption, right? It's hidden absorption because once again, icebergs are a way for the big money to place orders and get filled where they don't scare the market. Someone comes in here and drops in 700, 800, 1,000, 2,000. These algos see it and run away from it, right? So that's why they hide their orders. We can see what they're doing. That's the key. Most traders, if you're not using Bookmap, you don't know this. This is pretty pertinent information to know, correct? If you're short and you see someone's absorbing AK icebergs, the big money, you probably want to be wary of trying to hold a short. You're like, okay, this is not what I want to see. Okay, this gets out of the zone, I'm out. Right? This is the most important information you can have. I say it every webinar. I mean, you can't make money just trading bar charts or whatever, the 85 indicators that most people have on their charts. No, the stuff works, but you don't have all the information. So just imagine I have some guys at the lights finally going on in my trade room. They're like, well, I just figured out, like, well, if I use what I'm using and then I add in the Bookmap areas, the SI indicator areas, that's like really good information. And I basically say, yeah, no kidding. That's what I'm telling you guys every day. So it's not like you have to trade or see what I'm seeing, right? You know, if you think this stuff's advanced, the way I'm reading, whatever. If you have something you think works, and then you apply these volume areas, that's an edge. That's your edge that you want. If you're not using these volume areas, again, you don't have all the information. I don't care how good of a trader you are, you do not have all the information. It's black and white, right? And we say it every webinar too. This is the science. There's no disputing there was 245 sell ice there. The way you trade these is up to you. I'm showing you how I trade them and the best way I've determined to trade these areas based on watching thousands and thousands and thousands of these, right? If you say, I like sell ice as soon as I see it, I like jumping in right in the middle of the zone, great, go have at it. You may come up with a strategy that works better than having to risk ATR, so on and so forth. I've determined for myself, after trading thousands of these by trial and error, mostly, the best way to trade is forcing ATRs in and out of the areas, right? Out of the volume events. So yeah, that was absorption. And then when we got, I was going to short this aggressively because we were below the yellow lug. And once this was able to pop back out of here, an ATR, that short was canceled. Then I went long because we went ATR, retest failure. And then I took the long. And that, I just do it over and over and over. That's my edge. I follow my rules the best I can. Sometimes I do stupid stuff. I almost swore there. But, you know, for the most part, a lot of the times I'm taking trades and they feel terrible. I'm looking at the chart. I'm like, God, this does not look like there was a crude trade the other day. It looked horrible from a long standpoint. If you're in my room, you remember this. You're down here. This is a failed breakout. Gap down through the high volume node. This looked horrendous for a long. And what do we see down here? We saw two back-to-back double whammies. Let me show you. This is actually one of the trades that I took the time and documented in here. My busy schedule, but you can see here the real-time volume told me that something was up. I don't want to be short, even though that look. I can't tell you how many. I can't even guess how many people got short on that because it looked like the trade was going to die. The market was going to die. Is this trade right here? You guys, you get discounts to all this stuff on my website. Traders Sync, Tick Strike, Bookmap, Plug with Levels. You go to our site, just put in the 3-day trial, say you sign on Bookmap, you'll get discounts there too. But anyway, this was the trade. So I'm waiting for this to die. Where I'm on my webinar. This is when I get on my webinar, right? And I'm like, this first one fired off. That was this dark blue one. That's this. And I put these values in, so it doesn't print them like this on Bookmap. I put these in so I can see what it was. And this is going to be part of my new course too, because this was you don't see back-to-back double whammies very often. What's a double whammy? Well, it's the dumb money puke, 377 into the waiting hands of buy ice. Then it went a little lower, more dumb money puke, almost 400, into the waiting hands of buy ice, right? Hidden orders. So you had back-to-back double whammies. Well, if that market's truly bearish, why am I seeing bullish setups? And guess what? And you can see I took this trade, made money on it. So my point is, there are times where I'm like, oh my God, I can't believe I'm taking a long here like the other day. I could not believe I took a long there, but the volume, what is the most important, what I'm trying to tell you guys over and over and over, that is the biggest factor, the biggest edge. The real-time volume was telling me this thing wasn't going to die. And I got long. It didn't feel good, but I got long and I made money. That's why. So, yeah, I traded opposite of what it looked like, but the best trades are when everything. So if I would have got a short set up here, that would have been even better. That would have been an A+ trade because it looks like it's going to die. Then the real-time volume's telling me it's going to die. So do you see? And then that's when you trade bigger size. That's when you get an A+ setup, but there's going to be times where the real-time volume all the time actually doesn't match up with what you see. And that's where you either don't trade it or trade smaller or just say, you know what, I trust my edge and I'm taking it. And so here we go with the whipsaw. So this is exactly what I'm actually very happy I didn't get filled on this ad because this is what the relative volume is telling me this market is probably going to do today. It's just whipsawing you to death. And that's why when you see this, you probably shouldn't be trading these markets. It's summertime. Go golf. Go fishing. Go do anything. If this market can't get...
Stop sell GC, 358.
This has got to 100% one time entire morning. One time. Same here. That is just asking for this. Say no to algos. Speaking of algos, another stop run. The worst traders on the planet are in this market. I'm telling you, nothing but stop runs. This one's almost 400, which is a lot. Threshold in here is 150. I think I upped that from my original course. It was 100 in my original course, and changed to 150 over the years. Let's draw that.
Guys, and I just wanted to, for those of you who are new in here, and what Scott talks about with um, real-time volume and relative volume, I mean, you can see it both in Bookmap because the relative part is the dots and the dot size compared to other dots. And the real-time volume is like, well, you know exactly where it's trading, and you also know how much. You can hover over them to find out exactly how much, but you have that relativity. If you go back and look at a candlestick chart, you have no idea where on that bar all of that volume traded. And then that's what he means. We get that question a
Right,
lot about relative volume.
right, but it's relative volume for today. But the chart I'm looking at is not. The chart I'm looking at is showing me relative volume for this time period for the last 30 days. So that is not.
Yeah. I mean, it's very different, but to know the real-time volume, exactly where it's trading or exactly where that liquidity is and did it trade, etc.
You can see here, this is pretty much the biggest sell bubble out of this entire area. So yeah, it's relatively that's a lot.
Yeah.
But you want to be careful just trading bubbles. So I get a lot of new people that get Bookmap. They start seeing these bubbles and they're trying to trade off of them. This is just market buying and selling. Yeah, it's important and it's really important in certain areas. But I don't trade just off bubbles. I trade off. This is the main information for me. But for instance, like you could say, we were talking about having an art how you trade these zones. You can say, okay, we break this zone and you see blue bubble, blue bubble, blue bubble, or tiny sell bubbles. You can say, you know what, they're not selling this below here. I'm gonna go long the minute this gets back inside the zone, right? You can do that. You can do whatever you want. It's your money. But what I'm saying is, once you understand what's going on, then you can tailor your trading style or strategy to how you want. This is the science. How you trade them is the art. I'm not saying my way is 100% perfect. If you come back, it's just from my observations from all these setups that I've watched. If you come back and you come up with a better setup, share it or trade it, whatever you want. I'm always open to other strategies. That's how I've determined the best way to trade these. So this is, teetering on stopping me out. It'll be a tiny loss comparatively what I could have made if this actually got rolling. But we're still alive. So probably stopped out in wheat by now, I would think. Let's see here. That's soybeans. It's not out of that zone yet. Wheat, not yet, but it's coming. It's coming. Again, that was an error. That was user error right there. I should have been on a half into that important zone, and that was just me. Again, it's hard on these webinars when I have one screen. I'm not looking at it, but this was. And I was in the wrong month. I mean, I'm in December. This is the October contract still, but I should have been paying attention. And I guarantee you, like I said, let's just look right here so I could be more mad at myself. That was the point of control of that recent market profile, or not recent, that old market profile that I drew a little bit ago. Natural gas is getting smoked. Let's look here real quick, just so I can be a little more mad. So we stopped at basically 742-ish, 743. Hey, what do you know? This is 43.75. So I definitely would have been on there. You can see the market respected it last time. Before, this was again a year ago, pretty much. But that was an error. I made a mistake, and it's going to cost me greatly. But that's what it is. Because I'm supposed to pay, per my rules that you guys saw, I'm supposed to pay myself in important areas when I have a trade that is moving in my favor. Did I do that? No. Because didn't have the zone drawn. I didn't have that market profile drawn. Pay myself as the market makes money available to me. Log levels, market profile, composite, highs, lows, EOCs. That's where I should have been out of that trade. And then it was also important predefined zone based on candle structure. So I had both of those, and I didn't get out of at least two of them. So it's my fault. That's a mistake, and it's probably going to cost me. But I make silly mistakes too. So this is why right here, I mean, I'm holding on for dear life, but this is why I put my stop outside of the ATR. This is pretty much an exact ATR from the bottom of the zone, snaps back. This is these are algos, guys. This is all they do all day long, especially when no big money's playing in here. So this is the whole reason. If I survive this, it's because I put it outside an ATR. I did usually 2 or 3 ticks, right? So I survived it for now. They just can get rolling. I really, actually, I don't want to add. Let's see if this was an official ATR for sure. This was 75.50. This got down to 70.50. So that's 5 points. ATR is, wow, look at that. The exact ATR. But what just happened there? Anybody tell me? Since that went in ATR, what should I do now? Let me know if anyone tells me what I should do or what I shouldn't do. Anybody chiming in, Bruce?
Nope.
So because this market got an ATR below this area, even though I didn't get stopped out, because remember, I'm 3 ticks outside the ATR, this still got an ATR out of here. That disqualifies for me. This is a long setup, right? That's the whole reason, if you remember, I was going to go short this setup, and we got an ATR above it. So I canceled my short. Same thing just happened here, the other way. We got an ATR below it. This is now canceled, which actually makes me happy because I don't want to add in this market. so I have this on.
How do you manage that then, since you already have a position?
Well, this position is this position. To add a new position based on a new setup, which this was, that's disqualified. This is already in off of this setup, and I trail it just outside of an ATR. Right? I mean, you can come up with rules. You say, if we get an ATR and get back to the zone, I'm out of my long. I'll take my small brother. That makes sense? So this position was based on this stuff. I trailed it based on this zone. To add to a new position based on the newest setup, this cannot get a full, from the long aspect, this cannot get a full ATR below this zone, which it did, so this is canceled. This is still on based on this setup. Does that make sense?
Yeah, I got it.
All right. So just bang up trade today, though. This is really good. Minus the good part.
Actually, Nick has a good suggestion here. And Josh is asking questions about ATR, etc. Maybe we'll do a special event, Scott, and do it on ATR, and kind of how you're using it, because we just continue to get questions, and then we'd have something to refer people to. It's like, here, go watch this. It's all in here.
Yeah, I mean, I have no problem with it. I don't know how we're going to fill an hour talking about ATR.
No, we don't have
to.
It could be done in like 20 minutes or 15 or something. But just going through some examples and how you use it and what it is, etc. Instead of covering it every webinar.
Right. I mean, I do that. Yeah. I mean, I explain it every trade I take, but yeah, we can figure something out. That's part of my course as well. So if I ever eventually get my new course finished.
Yeah, I mean, you have your risk management all geared around that, and entries, exits, everything. And then how do you know how much to put on, and you have your own calculator, etc.
Right. Yeah, so that's part of the trade room as well. This is sure you could probably Google and find something out there like this, but this is like proprietary part of my trade room that'll help you make sure you're trading the right size based on your account size. This is the main reason traders blow out, because they're trading too big for their account size. Right? So you can imagine, say you've got, I mean, what are most traders? 10, 20 grand? Say you got $20,000 account. Say I got to risk 15 points in the yes, which is commonplace. You can see already right now, even I'm risking, if I have a $20,000 account, if I have to risk more than 5 points, the most I can put on is basically a one line. So that just shows you how much you're over trading. If you got a $20,000 account and you've got multiple normal contracts on, you're over trading your account, and it's going to catch up to you eventually. Right? But you can see here, if I've got to risk 16 points or more than 16 points, I can't even trade it. That's why you guys want to be trading micros, right? So all you got to do if you're trading micros is so if you have a $20,000 account, you would make this $200,000, right? The normal contract. And this is all based on micros. So if I have a $20,000 account if I'm risking 16 points, I can now put on 5 micros. There's nothing wrong with trading micros, guys, at all. And it helps you learn to manage multiple contracts. So don't feel like, I mean, the commission is a little out of line with what it should be based on, you know, what you're actually paying for the regular contract. But okay, the commission's a very small price to pay versus what you can do to your account if you're over trading it, and you will blow out eventually if you're over trading it. It's 100%. You may get away with it for a long while, but you're gonna have a day that you get smoked, and it's gonna really hurt your account, and then you go on a death spiral, and you're mentally beaten, and your account's getting killed. Like, it's just not worth it. Just trade it and build your account up methodically. You know, this P&L, even despite this drawdown, has been built up methodically. When I first started, this was based on a $100,000 account, right? And it was, as it grew, I added size, and that's the way you should do it, right? So as you grow it, that's where you continue to change that spreadsheet, and you could put, you know, another one on. So it's like I was trading 1s and 2s here, and as this grew, then it was 3s and 4s and 5s, right? So now I'm at basically a 4 and 5 lot in the S. If you're not doing that, then you're not trading correctly, and it's going to catch up to you sooner or later. All right, so this is a perfect example of how getting it outside the ATR, that for now, I survived that stop out, right? That was my usual MO lately, especially this month, has been stop to the tick, even when I put it outside the ATR. But this has been trial and error too. If you guys have been watching my webinars for the last 2 years, remember I was at like 50% of an ATR, and I kept getting stopped to the tick. Then it would go. I'm filled in soybeans, by the way. Then it was 70%. Then it was 80%. Then it was 90%. I kept getting ticked, and then it would go. I'm like, okay, because I kept trying to save a couple points, right? Like, that was the whole idea behind it. It was basically greed. And then I'm finally like, you know what? I'm putting it outside an ATR, and then if it stops me in a tick, then fine. I still lose my mind, but it's like, okay, it doesn't happen anywhere near as it used to. So I put it outside the ATR. I avoided the stop out. Here's 11 points and counting back in my favor. So you guys almost heard me complaining for hours over almost stopped out by a point and 3/4 or whatever. All right, so speaking of fill to the tick, this looks like it's going to do it to me. So again, this is not a good risk reward trade at all. I know the red lug is at 15, and I know that's the top of that market profile. But trade's on. My stop is now going to go in ATR below here, outside of an ATR. ATR is 3.73. You can see right there in the middle. So I'm going to go 3 ticks outside that. So it's 375. So that's 450. 4.5 cents below here. So 4 cents is 43.50. 43. Or I'm sorry, 93 is my stop. So this is not a good risk reward trade, right? So this is the point. If you look at this and you say, okay, there's major levels. I mean, I'm doing this more for the webinar too, because I just want to show you guys some trades. But, you know, if you look at a trade and you're saying, well, let's see here. Yeah, the relative volume has been heightened. It was heightened, but we are extreme standard deviation from VWAP. And this is one of the main markets. These gray markets are some of the main ones that will swipe back down, right? But if you say, hey, this is a major area, it's confluent with the top of this, if I'm right on this trade, I'm only getting 8 cents. If I'm wrong, I'm losing 15. You just don't take the trade, right? If you're down here and you say, okay, we got a long way, we got 40 cents to that red lug, I'm putting that on. Right? You see the difference? So that's what you have to determine as you get better at trading. This is not. Speaking of which, what I'm going to do here, I'm not going to trade full size here because it's just too. I don't feel like taking a huge beating on a trade that it's 1 to 2 risk reward. So I'm going to trade half size there. All right. Again, I'm not real excited about trading gold, but let's just take a quick look. There's just nothing really going on here. So below the yellow lug, now we're dancing around the yellow lug. You can see my excitement to trade this thing. So what you could do here is, if you want to trade depending on what happens here, we don't know until it gets an ATR out of here what kind of setup this is, but the ATR is 15.35. So round up 16 ticks. So since we're around the yellow lug, I'm going to wait for ATR retest failure if I do trade this. So I want to see 16 ticks this way, retest failure, 16 ticks this way, retest failure. Then I'll trade it. Then I'll put my stop, and ATR outside and ATR the other side. Okay. So it doesn't really matter right now because we're just sitting right at this zone, so we might put on a trade there. All right. Any other questions, Bruce?
Let's take a look. I think we're caught up in Discord and YouTube. Let's see. Questions on the orange Ludwig level. How does that come into play?
1 second here.
I thought it was yellow, not orange, but
Say it again.
oh, the orange level. I guess it's red.
Well, this. So if you see this pinkish, it's just because she has what I call them baby lugs, or she calls them minor lugs, right? You see, like right here, minor. So sometimes the minor is on top of the major. So these are her major lugs, and then these are the minors. So that just makes the area even stronger when you've got minors on top of majors. So for instance, there's a minor here somewhere too. That's why this is pinkish. I think it's pinkish. I'm colorblind, but there's no minor lug up here, so you can bet it's on top of this. And I think she talks about that in our webinar as well. But let's try to find another one, like this one here. Right. So you can see Nasdaq. There's been not one signal in Nasdaq today, but failed at that one. Starting to fail at that one again. Right. No, there isn't. So there is a minor. So sometimes there's baby lugs in the middle here. Sometimes there's not. But you can see there's a minor here on top of the major. So that's why this one's pink too. I'm trying to find one that's just flat out red. I think the crude was red. No. You do have new lugs in crude though. That's interesting. Yeah, so you see right here, I think this looks a lot more red to me, but you can see I think this minor is just below here, and then you got the red. It's still pretty much on top of each other, but otherwise there's certain conditions where she has minor lugs as well. I don't trade off of those, like they don't scare me as much. If the minor lugs are confluent with something else, then I'll get out of the trade. I'll get out of a portion, right? So say if we had, like right now here, this is ES. This is actually a place I want to. If this fails back out of here, I'm going to get out of a couple. I forgot to even look at this. This is an important area. If this can accept in here, then we should come back to the other side of this. If this fails back out, I'm going to get out of a couple here and take my little profit. I would have already done that the first time up here. I just wasn't watching. So you can see this is trying to push through here right now, and they are starting to buy these stocks. So this is another way you can use this tick strike. Again, go to my website, you get discounts to this as well. This is very important. I say how it tortures me every day. I call it waterboarding. But you can see, like if you're looking at an important level right here, you're like, should I get out? Oh, wait a minute. No, they're buying all the stocks that comprise the indices that make the futures, that comprise the future, right? So you're like, I'm going to hold this. If I come up to an important area, this, lug, whatever, and you hear silence, you probably want to get out of some, right? It's just another thing. It looks like I'm using a lot of stuff. I'm really not, and it's all very, very simple. There's nothing really complex in my trading, and that's by design, right? The simpler, every webinar, same stuff. The simpler you can make your trading, the better. So I'm going to watch this. I know this is that market profile composite low right there that we're trying to punch in. If this comes back out and I see red bubbles and this stuff dies, I'm going to get out of a couple of these.
223 contracts.
Soybeans is not okay. So this is good too, right? So now, man, I got out of two of these because now there's a new setup. You see this buy ice coming in? Now I can trail my stop. So now I'm not risking much at all here. I'll just, what I'm going to do. I'm going to put this back on. Because now this is not I don't normally do this, but I got out of two there because I didn't want to risk 17 cents on this damn trade. But now I have a new setup. Here's your new setup. Draw the zone. Now I can trail my stop. I'm not risking $5 million on this trade. I'm exaggerating, obviously. I wouldn't add to this trade on this setup because it's right on top. The red love is right above us, but definitely control my stop. Now we already know what I say TR was. It's like 4. What's that? Oh wait, I want to get out. Remember I said I was going to get out of a couple of these. I'm going to get out of 3 of these right here. Especially guys, when you get to important areas and there's no relative volume, be very careful. And you notice this is quiet now. It looked like it could pop through there. We got one here. 1 second. All right, so I was looking at ATR for the soybeans. I've, of course, lost my chart like I always do. 1 second here. There it is. 3.55. So I'm going to go, you round up to 3.75. I go 3 ticks out of that. That is 450. So 450 below here. Now I can trail my stop. Bottom of the zone's 875. That's 475, 425 is where I'll step out of this. All right, and that's basically not a scratch, but I'll just lose like 3 cents instead of 17. See the difference here? So my original stop was here because of the new setup. I just saved myself potentially 12 cents of risk. Now this is a good risk reward trade, right? I'm risking 4 to make 8. If this gets up to 15, the red logo is here. You can't always count on a new setup, right? So when you put on the trade, like I said, you got to determine, hey, do I want to risk 15 to make 8? But now that the new setup came in, now I'm only risking basically 4 cents for my entry to make 8. And that's good. So I'm not going to get smoked on this trade even if I'm wrong. Kind of like I'm going to get smoked here. I didn't get stopped out yet. You can see it tried to get an ATR. It's basically an ATR, and then it snapped back above this volume event. So the bottom line is, if beans is right, this is probably going to be wrong because these grains usually follow each other pretty in tandem, in sync. All right, so we got out of 3 here. So again, you want to be watching this relative volume in important areas. So I can look at this. And look at this. This thing cannot even get to normal volume for this time period, this time of day. Again, it's not because we're at 10 o'clock, 10:30 Central, right? Of course the volume is going to fall off at 10:30 Central. This is showing you 10:30 Central for the last 30 days what we're doing, and we still can't get above normal. When you come to important areas, if there's not participation, you, a lot of times, most times, get the snapback. I'm hoping these stocks can propel this higher, but we'll see. Change this. All right, so I think your other guy's starting here shortly. Any other questions, Bruce?
Let's take a quick look. No, I think we're pretty good. Yeah, Les, you just covered the lugs, etc. No, we're all set, Scott. Yeah, summer doldrums, but should be picking up here pretty soon in September.
Yeah, usually, you got a huge OPEX tomorrow. You're going to get some trade tomorrow, but who knows if it continues in the next week.
Yeah.
Again, just monitor your relative volume. If you're seeing, you open up your charts and you're, half hour into the day and you can see the thing can't get above 1, just don't trade it. Trade other markets or go enjoy your summer, work on your trade plan for when it does pick up, because it's going to pick up and you're ready to go, right? Instead of forcing trades in this chop fest, build your trade plan, take some of the stuff that I talk about, try to build your own important areas, so on and so forth, and be ready to go when the volume picks up. Right? And don't throw away money and your mental, can't think of the word.
Energy.
Not fuel, but energy. I was thinking of something else, but don't waste it in this type of market and get all despondent and, hey, this stuff doesn't work. I can't make money. The markets are impossible. They're, so on and so forth. Build your trade plan so when it does pick up, you're ready to go and then you kill it. So there is low relative volume here, but they're trying. Let's see. So my targets now definitely the spot gamma level. I'm gonna peek at the hero and see what that's looking like. When we get up there, you want to make sure there's no divergences. This is already starting a little. This is nothing major, but you can see this is starting to head the other way. So if we get up to that 4,300, actually this is QQQ. Let's look at SPY real quick. Let's jump off. Let's see. SPX. See how it's starting to roll the other way? This is not red light, green light. Doesn't mean, oh, I'm going to sell right now. But if this gets down here and this gets up to that spot gamma 4,300, you better be careful being long, especially if there's no relative volume. That's that. SPY is not too bad now, but if you have this, keep an eye on it. Again, you can get this through the Bookmap marketplace or on this website. It's something you want to definitely helps. Because you got to remember, options play. There's a reason I use this stuff. Option players are a major participant in these futures markets, right? So it behooves you to know what they're doing. I was going to say one more thing. I can't remember. So pretty dead day. At least we got one trade on. And you guys learned something about ATR. I didn't get stopped out because I had it outside the ATR, or you'd be hearing me cry this entire time. So that's cool. You didn't have to listen to that. And then you saw a mistake. Again, my mistakes are your learning opportunities. Should have been out down here. Instead, I get to carry this thing up 18 cents. That's not cool. And that's about it.
Yeah. No,
right,
and
Bruce,
you went over
this
your
is your
trading
question.
plan and everything. No, that was real good stuff. Yeah, thanks, Scott. So we'll connect next Thursday. And we'll think about that. Maybe I'll reach out and we can maybe schedule something later, maybe in September on just ATR, etc. And kind of a Q&A, and you go over what you're looking at, etc. I don't know,
Okay.
something just it doesn't have to be any big formal thing, but just something I think will help others clarify. And then we have it so you don't have to go over it all the time. That would be good.
Right. Well, I still have to. I do it in my room every day. But that's fine. So another thing, guys, we just talked about that spot gamma level right around 4,300, right? Well, you see what's there, red lug, pink lug. And then you also have point of control, and that's where it failed yesterday. So if this market does make it up here, be very, and especially you start to see that divergence on the hero, be very careful trying to hold it, thinking you're going to get all the way up here. I will probably be out. Well, definitely be out because I get out the red lugs unless I see some major relative volume pushing through here. And then if you get a short, that might be a good place to reverse it.
Yeah, yeah.
That's it. That's my trick.
All right. Well, yeah. We'll connect next Thursday, and I'll put into the chat here how to reach you, Scott, if anyone's interested in your services, in your trading room and etc., or trading course, whatever it might be. And let's see. You'll be redirected here to Tom B's webinar, Volume Profile Trader, right after this. So if you guys want to just attend that one, this will go right to it. And
Cool.
yeah, you're all set. Yeah, no, I have nothing else to say. Thank you, Scott.
All right, no problem. I'll see you guys next Thursday.
Okay, excellent. Thank you.